What's going on, everybody? Welcome to today's video. In today's video, we're going to take a look at Bitcoin and look at the logarithmic regression curve, right, that a lot of people look at. But we're going to do a little bit differently today is actually take a look at the Fibonacci levels inside that logarithmic regression curve and see if we can find any clues on what Bitcoin's next move might be on the longer term time frames. All right, so that sounds good, you guys. Make sure you hit that like button right down below and also press the subscribe button if you guys are new for a little bit different analysis than normal. All right, so if we zoom out, right, guys, if you guys are unclear, this is the logarithmic regression curve for Bitcoin, which connects basically all the highs of Bitcoin, right, and all the lows, and sort of fits it in a logarithmic regression curve to try to predict the future price of Bitcoin over the course of the next couple of years, right, over the course of the next couple of years. What we'll say is, right, basically looking at this theory is we have not yet reached the top of the logarithmic regression curve for Bitcoin in this current market. Now, like my friend Ben Cowan says, right, we only have 3 data points that are connecting the top, the top 3 data, right? So we don't have enough data to really say if this is a true theory just yet, okay? So I wanted to basically explain to you guys what it is first, if you guys are unclear what the logarithmic regression curves are. Now, inside these log curves, we're going to take a look at the Fibonacci levels. So normally on this channel, we do look a lot at the Fibonacci levels, but we haven't yet really done it on a log scale thing, right? So we haven't taken it on a log scale. So what did I want to note here to start it out? So just on this last dump for Bitcoin back in May, all the way down to July, we basically came back down to the 386 Fibonacci level on the log curve. So you can see right here, we held it nicely as support. And then after we started bouncing, we came back up to about the 0.5 Fibonacci. And for a while, we're actually holding it as support very nicely. Now, since then, we have broken it to the downside, but we've yet to get a weekly close below, right? Today, obviously, today's Monday. So we have a long week ahead of us. Now, let's go, before I want to make my conclusion here, I want to go back and look at some of the last, levels that we went into a bear market and see if we can find any similarities, or even times that we've been in a bull market and find any similarities, okay? So let's start basically with the 2018 bear market. Well, you can see on the dead cat bounces in the bear market in 2018, typically on a weekly close, we never could reclaim, right, the next Fibonacci level on the log curves. You can see right here on this first bounce, we basically went from this Fibonacci level, and we could not get back above this Fibonacci level, right? So that was a fail, right? And you can see the next one where we came back down to the 0.5 Fibonacci, the middle Fibonacci, we bounced back up, could not reclaim the next Fibonacci level. And then we dumped, held it as support a little bit, but we came back down, bounced off this Fibonacci level, bounced back up right to this Fibonacci level. It's quite beautiful, if you ask me. If you guys watch the stream, that's my go-to saying. But then we bounced again, all right? And we actually bounced off the Fibonacci level again until we broke it, confirmed it as resistance, and that was the start of the dump back down to the bottom, okay? So you can see how important those levels were in the 2018 bear market. Now let's look at the 2017 bull market. Do we have something similar? Well, yeah, if you take a look, just starting at the top and working our way down, you had a rejection and you had a support, okay, perfectly at those fib levels. You had a rejection and a support purposely at those fib levels. And this one too, I mean, we went a little bit below, but you can see it was a quick, if you go below, usually you have a normal quick move right back up to sort of reclaim those levels if you want to reclaim them, okay? So you can see how important those levels are. And just one more example, in 2014 bear market, you can see right here when we came down, or even on this first bounce here, you can see we bounced off this fib level and got rejected off this fib level. And then we came back down, it bounced off the 0.5 Fibonacci, came back up, actually had one close above the next fib level, but then went back below it, confirmed it as resistance, and made our way back down. Also on this bounce, we did the exact same thing. So you can see how important these levels are, guys. I don't really have to explain to it much more other than that there. But let's go back to our current market. Why do I think this is so important, and why did I want to touch on it today? Well, just like we've stated how important these levels are, in both a bull market and a bear market, what we want to do here this week, I think, is very big, and I think could be telling on what Bitcoin's potential next move here might be, okay? If you look, we have broken this fib level, okay? But it's only Monday, right? We have a long week to go, right? So if Bitcoin can get back above this 0.5 Fibonacci and close this week above here, right? And just turn this into a little bit of a wick, I think there's a good chance that we just continue to confirm this as support before moving up to our next Fibonacci level. I think there's a good chance of that. Now, if Bitcoin closes this week below this 0.5 Fibonacci, I think there's at least a possibility, right? We don't know with Bitcoin. We know Bitcoin does whatever it wants to do whenever it wants to do it, right? But I think if we close below this week, below this 0.5 fib in the log curves, just going based off history, what we've seen in typical bull and bear markets, we usually go back down to test the next fib level, right? So where would that next fib level be if we were to go back down to test, right? So if we close this week below the 0.5, where is this fib level going into, say, next week? Well, it would be somewhere around about $36,000, which is a interesting level for Bitcoin. If you look, we do have a local peak right there at about $36,000. Now, do I think that we're going to be consolidating down at $36,000 if that does happen? No. But we've talked about on my stream how I do think one dip could come, and I think it would be a quick dip to sort of create a bunch of fear in the market, right? Get everyone scared, drop the fear greed index to about a 20, and then have Bitcoin continue up, right? So if Bitcoin does close, I could see a quick move down and then another quick move up. Kind of similar to how we did back here in 2017, where we thought we were breaking the fib level. We had a quick move below, and then the next week we bounced right back up. I could see something like that happening for Bitcoin, and this is going to be interesting. Obviously, it's not confirmed. We have to close the week. If we close back above, we talked about the bullish scenario. We're good to go, but it's going to be interesting to see what Bitcoin does this week on these log regression curve Fibonacci levels. All right, so once again, guys, hit that like button if you guys enjoyed today's a little bit different of analysis, but I wanted to drop a video today. And also press the subscribe button if you're new, and go follow me on Twitter and the Discord, which is in the links right down below. All right, I'll catch you guys in the live stream coming up shortly. Peace.